The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to Payroll Question Time from SD Works. My name is Natalie McDonnell. I'm Senior Events Manager at SD Works and I'm delighted to be moderating this webinar for you today and introducing it and our speakers. Our webinar today is titled The End of Furlough, What's Next for HR and Payroll. As usual, we've sort of collated a number of questions ahead of the event and we've put these together to form the agenda. We have questions on the topics that we compiled ahead of the event, but of course, if you've got any questions that you want to pose to our panel, please send them through via the chat box, the question box. I'll pull those together and we'll hopefully have some time for Q&A at the end, and that's when I'll be asking our experts to comment for you. Polls, we'll be running a number of polls during the session. Please do get involved. They're multiple choice, quick polls. It really helps us to form the content for you. And just to get your engagement on that is really helpful for us. Slides and recording, we'll be sending the slides to you after the event and the recording as well. So do take notes if you want to, but we'll send you the recording so you can access the content after the webinar. We'll also get it on our website next week, so you can download it or share it with your colleagues if it's very helpful for your HR and payroll teams. We have to put up this disclaimer, so I'll quickly read it through for you. The presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. So, our speakers, anyone returning to this session will know them very well by now. We have, sorry, let me put up the screen, we've got Simon Parsons, Director of Compliance Strategies at SD Works. Simon, would you like to say hello?
Hi, hello everybody and welcome to the webinar today. Hopefully many of you will know me. If not, I'm very loud and about on public social media on various topics in the payroll world. I go back to 1984 when I joined Centerfile, part of the NatWest Bank group, which SD Works are the long line of that same company. So sometime I actually did leave in between. I went away and came back in 1997. So a new boy still. I have a Master of Science in Payroll Management through the CIPP and their diploma, of course, and have sort of 30 years of software development in payroll and specialize in very complex areas of payroll legislation.
Thank you, Simon. Dan, let's go to you. Sam from CIPP.
Oh, hi everybody. Good to be back. I really enjoy these sessions. Following on from Simon, I can just beat Simon just slightly. I've been around in payroll since I was 16, which was no time at all ago, of course, but actually is 40 years now. It is my absolute privilege to be the technical lead at the policy and research team. My payroll background, however, is many and varied, as most people's are, but predominantly has specialised in serving the SME market through payroll bureau services. It's a pleasure to be here. Thanks.
Thanks, Sam. Lou, so Lou Gray from EY.
Hi everybody, it's good to see you all. My name's Lou Gray and I work for EY Absolute, which is a managed finance operation for private and mid-market businesses. Similar, I have 30 years experience in payroll. Most of those, the last 20 had been in local government, and then I moved into EY, one of the big four where we have a managed payroll bureau service. I'm also very keen on social media and to raise the profile in payroll, and I have achieved individual chartered status with CIPP. Thank you.
Thank you. Kirsty from DWF Law.
Thanks, Natalie, and it's great to be with you all again. I am not a payroll expert. I'm an employment lawyer at DWF. I've also been around 30 years. I can scarcely believe it, and I have been advising throughout that time on the different aspects of employment law, but more regularly at the moment in relation to redundancies and all the different job support and job retainer schemes that are going on, as well as quite a lot of discrimination which is overlapping. And it is really helpful to be with this group of people because I can see what the practical side of the advice I'm giving is in terms of pay and how you manage people on the ground. So it's been fascinating, and also hearing from you, Andy, which you're going to come on to, because pensions is always something I approach with some trepidation. So you seem to make it quite straightforward, but it isn't for me.
Thank you, Kirsty. And last but not least, Andy from the Pensions Regulator.
Hi everyone. Yes, I'm like most people up with Kirsty, I guess, but in terms of payroll experience, sort of 30 years. I now work for the regulator. They recruited me to help liaise between the regulator or pensions people and the payroll industry, particularly about automatic enrolment, where the software needs to do the payroll is fundamental to the operation of automatic enrolment. And so I'm here hopefully to add the pension bits to all the various discussions we have, and it's always busy and exciting, although obviously a challenge.
Absolutely. Well, thank you. Thank you for your time. We give an hour and a half for these sessions. We always have a lot on the agenda. Hopefully we'll go through everything. So yeah, let's crack on. So our discussion topics for today, I just have this slide on screen. We're talking about pandemic restrictions, the end of furlough, the job support scheme, the bonus, what's happening to the autumn budget, redundancies, the plan for jobs, and if we have time, what can we look into or prepare for the future? So to start us off with then, we're talking about the pandemic restrictions on employment. I have a question here for Kirsty, actually. We're seeing increasing restrictions being applied, not quite full lockdown, but local measures and encouragement to work from home where possible. So what are the latest pandemic restrictions that are applied to employment? Oh, I think we've got a problem with Kirsty's.
Yes, you may have frozen a little bit on the link there.
Oh, okay, I think she's probably leaving and rejoining. Simon, maybe you'd like to pick up on that first of all to comment on that question.
Yes, sure. We're finding a very unsettled world at the moment, isn't it? So we're all getting back to normality, we're all eating out, we're all getting back to the office, and now we've had a change of circumstance where we're sort of told to work from home if you can, but if you can't, go to work. Local areas where you're in lockdown, and we've had some recent legislation passed. So if I talk about that, maybe Kirsty will catch up and talk, but we've had the case where employers have been given legal duties, which if they breach, they will potentially be fined for. So for example, if someone's been told to self-isolate at home, the employer can't coerce them to work in the office place. They can work at home, but they can't do other work or attend offices. And I'm aware, I even see it within family or neighbourhood, of people who are actually being pressured to turn up for business, whereas actually the employer could then face penalties and fines.
Mm-hmm.
Yeah, I mean, I'd go further to add to what Simon's saying there, to talk about the pilot that's been running in England for employees who are in receipt of benefits and who are told to self-isolate for 2 weeks but are unable to work from home and therefore are losing income. They may be able to apply for a £500 grant from their local authority. That's kind of very recent news because the pilot's kind of been extended, but only throughout England. That's not kind of a UK-wide measure. And I think probably picking up on the point Simon's making, that devolution really impacts this and makes life very difficult for employers in terms of monitoring, particularly if they have UK-wide operations.
And Lou, what about in Northern Ireland? What are you seeing there?
In Northern Ireland, I mean, we seem to fall behind where the decisions are being made in England. Sometimes maybe it's a week, 2 weeks, 3 weeks behind the decisions. Other times we are quite proactive. And I think that's one of the hardest things whenever it is when you're working over England, Scotland, Wales and Northern Ireland, taken into that consideration, but also Northern Ireland then we have across the border and down south. And we're looking at things that are happening down there, and it's to bear in mind everything, and it's then up to the individual employers. And of course, working in EY Absolute, we can have employers all over the world, so it's globally, and it's being knowing what applies to individuals where they are. I think one of the most important things that for me personally has been that EY has been very in the forefront of making sure that we can work from home. So I'm very fortunate. I don't have to worry, but I do have a husband who works in retail, and therefore that's a different situation.
Absolutely, yeah. Oh, Kirsty, you're back.
Sorry,
Welcome
everything
back.
went dead.
No, not at all. These things are happening. I know the weather where I am is terrible, so I hope I don't cut out soon. But yes, Simon and Lou just commented on that, so I don't know if you'd like me to ask the question again, so it's fresh in your mind. But we're asking, with the increasing restrictions being applied, not quite full lockdown, but local measures being put in place, encouragement to work from home, what are the latest restrictions that are applied to employment?
I mean, I think the most important thing I've seen is around the catchily titled health protection, coronavirus restrictions, close bracket, self-isolation, open bracket, close bracket, open bracket, England, close bracket, regulations 2020, brilliant, which makes it an offence for an employer to knowingly permit our worker to, or even that includes an agency worker, to attend any place where other than where an individual is self-isolating, and that includes individuals who are required to self-isolate because they live with someone who's tested positive. So if an employer knows a worker has tested positive or lives with someone, it's responsible for stopping the worker from working unless they can work from home. And if you don't do so, you get a fine of £1,000. And I'm not sure people have really picked that up. Apologies if you've covered that. And there's also an obligation on workers to tell their employer that they're self-isolating. And if you breach that, then that's a criminal offence. And again, I think that's something that possibly people don't appreciate. That they've certainly hardened the obligations and the sanctions in relation to that. Is that sort of, I'm not sure if I'm...
That's very good. And the thing we talked about the other day in the pre-discussions, I think, Sam, was the fact that there's a right to statutory sick pay for those workers from day one. However, the original statutory sick pay law extension should be ending imminently because it was only for a set period of time. So we were wondering actually if there'd been any news from the government on an extension of those, because there were indicative dates in the original law. No. Thoughts?
There's been nothing publicised on this, but certainly, sorry, there's a bit of kickback there. There's been nothing publicised through this, but this is something that, following our discussion the other day, I did follow up with HMRC just to see if there was any news available on that. And the understanding is that it will the requirements or the changes to SSP as a result of coronavirus measures will be extended for the duration that they are required to be extended to. But there hasn't actually been anything published on the thorny subject of statutory sick pay for a little while.
Thank you, everyone. I hope you can hear me. There's a hailstorm going on behind me outside, so apologies for the loud noise. Let's go to our next slide about the end of furlough. Before we kick off, we actually do have a poll, so I'm going to pull up the first poll. 1 moment, let's get on the screen. There we go. Should be on your screens now. We're asking, are you prepared for the end of, that should say, furlough? Apologies, it's not enough space to type out that question. So if you could put in your answers, that would be great. A bit longer, we can see a lot of people are putting in their votes. So asking, yes, we're ready. We haven't furloughed. We're going to struggle when it ends, and the job support scheme won't help. We'll move into the job support scheme, or we're not yet prepared. So I'm just going to keep that open for a little while longer. Simon, what do you think is going to be the most voted for whilst we're still collating the responses there?
Well, as we've got certainty in the world, I've got absolutely no idea. Is probably a true answer, but I could pretend that we're already back and there's no more furlough. So we're all back working. Everything's going to return to normal very quickly. Is it Cynical Friday?
I think it is you.
Well, you see, my prediction was right.
There we go. Yep, 31%. We are already back with no furlough. 18% we didn't furlough. 21% we're going to struggle when it ends. We've got that 18%. We're going to move into the JSS. 30% we're not yet prepared. So thank you for taking part in that poll. It's good to just see where everyone is before we start off the next discussion. So a question I have for Lou. We're in our last month of furlough. What is different about October? Oh, sorry, for Sam to comment first, if you wouldn't mind, Sam, and then we'll open up to Lou.
Oh,
Sorry.
I'm just going to be reading from the slide, but obviously we've been moving as we've moved through the months. We've gone from full furlough March through to the end of June, and then from July there's been a gradual withdrawal from the government's. No, don't say it. I know what I was going to say there, but the gradual withdrawal from government funding, which has seen the amount that the government commits to the cost of furlough hours reducing gradually. So now in October, as the slide demonstrates, the employer, in addition to paying for the working hours of the employee, they're also paying all on costs. So that's on cost of working hours as well as on costs. That's employer national insurance contributions and the minimum pension contributions of non-working hours, furloughed hours, and 20% of the 80% CJRS claim. So this is the final month for CJRS as we know and love. And what we now know that we didn't know when we last spoke was that the deadline for making the final claims is the 30th of November. So as we saw with the first section of CJRS, there's a 1 month claim period once we get to the end of October, which is a very tight timescale for employers. As we know, when we're working payroll, quite often information dribbles through late in the day. So we really do need to be prepared. And what we're hearing anecdotally from members and people in the profession is that a lot of employers missed the 31st of July deadline because they didn't know. And if they're using a bureau, they're blaming the bureau. And it didn't matter how many times the bureau was telling them. So I think my personal message at this very moment in time is cascade that message about the deadline. Make sure you bolster your defence for the accusations that you didn't tell someone what the deadline was for the claim period.
And I think that deadline is going to be a struggle for many. I don't know what the view is around, but 30th of November, that means I have to be assured that I've got all the data in. I know when everybody's worked for October. And quite often the hours collection is mid-November that collects all the overtime, additional time, adjustments for sickness, holiday, everything else. So I'm actually wondering if that's really going to be a struggle, because it possibly puts the monthly cycle into a 7 to 10 day cycle to actually firm up all the calculations and get that claim in.
And also, at the end of July, the claims were more straightforward in relation to the first part of furlough. Flexible furlough is much more complicated and has changed 3 times. So, again, that's an added burden. And you've got a lot of people now looking at different ways of pay, making redundancies, consulting on redundancies, possibly using the job support scheme. a much bigger burden on requirements to report and consult generally, as well as this deadline. It does seem that ought to be a longer deadline at the end of this part of the furlough scheme.
And I think I would agree with that, Kirsty, on the basis as well. With our next, we're going to cover the nudge letters and the letters that are going out to employers, just saying about their job retention scheme applications and what they've applied for and what they have then paid out, is the fact that it's important in this period where we now have to have all our submissions by the 30th of November. Really, businesses need then to start looking at an audit for the claims that they have made to make sure that it is factual and it is up to date and it is correct, which very much puts it then in the month of November. A payroller or a finance team or the HR team are looking at the fact that furlough has ended on the 31st of October. There's a new scheme has started on the 1st of November, but the old scheme, they have to make their claim by the 30th of November and make sure that that information is accurate and correct. And that is, whenever you look at the whole furlough exercise, that is a vast exercise for so many businesses, on top of the discussions of, can we financially survive from the 1st of November? What are we going to do in December? Christmas is coming, and there's so many aspects that a business has to consider. And that, in part falls back on the payroll provider and the person who's running the payroll, because then they're under even more increasing pressure. Who knew that was possible? Whenever you look at their calculations and paying people accurately on time, but then they have to produce these reports and these figures that is required then for claims.
I joined the anti-money laundering presentation that was webinar that was a week and a half ago from HMRC. It was interesting that they actually referred to furlough fraud as reportable activity under anti-money laundering monitoring. And do we actually realise that? Because sometimes I think there's an element of accidental activity and error going on, but occasionally I think we experience that one or two of our customers may actually be, dare I say, cooking the books a little. And we do see that on some of the claims that have been reported in the press of people that have been coerced to work or just carried on working, yet their employer has claimed furlough grant for them, even though they've never stopped working.
Yeah.
It's a question of, do we understand what our obligations are as payroll professionals that potentially we're held under?
And I do, and I think it's because, sorry, Kirsty, you go ahead.
All right. Yeah, I was just noting that HMRC had stated that they won't seek out innocent errors, but they will take action against anyone who deliberately sets out to defraud the system. But they also say, or claims money that they aren't entitled to, which is the same as an innocent error, isn't it, really? So, that does concern me. And it also concerns me that we've got lots of, in low paid workers, you've got people who swap shifts. And if they're on flexible furlough, are we controlling those people because you could be inadvertently claiming for someone who is actually working because they've done someone else a favour, covered their shift, for example?
Yes, no, that's right. You see that certainly in the hospitality trade. You think, with my children having been students and working in that sort of industry, if you can't work a shift, you swap with your friends.
Yeah.
And there could be different hours associated with that swapping.
Yeah, no, indeed. And also, of course, in October, what we will see is the first of the deadlines by which an employer needs to be reporting as a result of the July 22nd Finance Act. Employers need to be reporting where they've taken action that might under a CJRS claim that might lead to penalties being applied, which could, and because the penalty regime for the coronavirus retention will treat any overpayments of coronavirus claim as if they are overpayments of income tax. And therefore, when it comes to penalties, the application penalties could be as much as up to 100% of the original claim that was made either in error or otherwise. And employers have an obligation to report those if they've not made corrections, or if they have reason to believe that it could be open to interpretation, and they want to alert HMRC. So that 20th of October will be the first of those deadlines. The deadline will ultimately be the 20th of October or later, as depending on when the income tax first becomes due. So that's another key area of October, of impact of October, but it links to everything that everybody's saying about the compliance obligations now, and the activities that HMRC are starting to undertake to nudge employers into compliance where they have reason to believe that they aren't being compliant.
And I think that's the one thing out of this conversation today that, you know, anybody in payroll and HR need to consider is, just because you don't have a nudge letter doesn't mean to say that don't go back and do an audit of all your claims and make sure that you have the data gathered together and that you have the evidence to back that up, along with the legislation at that date and that time that you made that claim. Because as we all know, look at how many legislation updates we've received over the last 6 months. Look at the amount of wording that has changed slightly from one piece of legislation to another. And I think that is such an important part of the payroll work at the moment, and for the finance team, the responsibility of doing that audit and having everything completed by the 30th of November. And I think very much in payroll, we will always get it done, but it's the fact I don't think anybody appreciates, unless you're actually working in this environment, how much pressure and how much work that actually involves, because it is huge and there's a lot of responsibility back on, you know, as we've already said, as Sam's already said, you know, the Bureau will always get the blame that you didn't do this and you never told us that. And it's the same very much for in-house Bureau teams. You know, how many times does anybody in payroll get a thank you, you got my pay right? But very often if there's a mistake, it's your fault. And everybody's very quick. But there's so much responsibility back in payroll at the moment.
Funny thing to say that I just had not a question but a comment saying thank you for understanding the stress that us payrollers are facing. This is like therapy. So
good. Oh, good. It's one of the biggest self-help groups, I think, on the planet at the moment.
Well, I had a few questions ready for you, but you guys have just covered it off in your discussions about, you know, about receiving the letters, what should an employer do, about the November deadline feeling tight, what are the implications for employers. So we've sort of covered that off. I'm going to go to our next slide here about the job support scheme. I think we have a poll on this. Let me just pull this up to start us off. So
I was just thinking that, so if everybody thinks why we're so happy, it's because we keep on bills.
I didn't catch that, Simon. What did you say?
I say we keep on taking the pills. That's why we're all so happy.
Coffee helps. Coffee helps.
Yeah.
Poll time. Will you make use of the job support scheme? No, we're back to normal working. No, we cannot meet the qualifying hours. Yes, we can meet the qualifying hours and we'll use it. So I'm just going to leave it open a little bit longer. We've only had about 50% of our audience vote that one. Okay, I'm going to close that. Let's share the results. 56%. No, we're back to normal working. 16%, we don't qualify. And yes, we can meet the qualifying hours and we'll be utilising it. Lou, what are your thoughts on those results? Is that what you expected to see?
I mean, the fact that a business is back to normal working, to me, is excellent. I mean, that is such good news, because whenever we're turning on the news, or even in the business that I work in, it is surprising and shocking how many businesses are having discussions about what their future is going to be. The job support scheme can be a great help to the employers who can forecast a healthy spring in 2021 and can afford to retain the talented staff that they have in the interim. But the thing is that not all employers are that lucky, and that they might need to consider cutting costs, and also then people losing their job. You also have to consider, just look at the hospitality business and where it is at the moment. I mean, we have various lockdowns throughout the whole of the UK, meaning that businesses can't actually have the opportunity to open up properly. And I'm sure that, Kirsty, that you've had a lot of inquiries or questions in from businesses, or even maybe even employees. What does the future hold for them, and where will this job support scheme, where will it take them?
Well, a lot of people are asking, what's it worth? Is it the same? And obviously there's a lot more expected of the employer for less work. You know, you're paying a minimum of 55% for a third of hours worked, and there's a cash flow issue, and actually it's cheaper to make somebody redundant than keep 2 workers on the job support scheme. So unless people have got the ability to fund it through their cash revenues, and really need those jobs, they're not going to use it. And there's lots of questions really coming to a head at the moment because of the lockdowns, especially in hospitality. You know, if a lockdown, how can I possibly give anyone a third hour's work, and what happens then? And I don't have an answer for them then. I'm hoping that Mr. Sunak might have something even now to tell us today about how we manage that, because we are at risk of losing whole sectors really to that. And you know, a lot of the announcements are so late that consultation for redundancies already started, and you know, I'm certainly doing a lot of template letters at the minute, because otherwise people are going to run out of the time for collective consultation. The job retention scheme will end. They won't be using the job support scheme, and they'll still have to pay people in full or go under and not be able to pay them at all. So it's, you know, it is proper crunch time at the moment. Very happy, really.
So we're holding up just this slide with just some high-level stats on there, just sort of for people to refer back to. But a question we've got is, well, it's like, what do we know about the job support scheme? Very simple. So yeah, I mean, I know it was released just quite recently. Sam, what insight do you have that payrollers and HR people need to know?
Yeah, I mean, really, all we've got at the moment on the job support scheme is high-level information that was published on the day that the Chancellor announced this scheme. We're waiting, as ever, for that. I mean, this must be the quote of the year. Guidance will be published shortly. I mean, I think that will be ingrained in our heads. So yes, we are waiting for further information on the job support scheme. What we know, as the slide says, is that 33% as a minimum need to be worked. That doesn't mean to say only 33%, but 33% need to be worked of usual hours. We have an idea that, and again, this is from the high-level fact sheet that was published, is of those remaining non-worked hours, then the government will fund 1/3, and the employer will fund 1/3, which, you know, as we've already discussed, the impact that could have on an individual employee. We know that the maximum amount that can be claimed in any month would be £697.92. And the usual wages definition is loosely due to follow the same definition as the coronavirus definitions that we've seen, which I don't know whether that gives me heart or horror, really. The whole nightmare of the calculation of usual hours. What we know, of course, is that SME organisations will not have to prove any financial detriment, but of course large organisations will have to prove that they are suffering financially as a result of coronavirus. And the fact sheet confirmed that there is an expectation by government that the large employer will not be making capital distributions if they want to make a claim. So there's still much to know, and obviously from our perspective, from a payroll perspective, it's all about the detail, because that's what we need in order to plan ahead. There are so many schemes. For example, we have the Kickstart scheme. You know, so there are many schemes that we could be taking advantage of, and that, you know, the sooner that information, that guidance is published, the more it can help in the planning. But and just, you know, from a payroll professional perspective, this is an important time to really be helping to raise your profile, to be able to, and I know it's difficult because I'm picking up on what Lou said about the pressure that payroll professionals are under at the moment. But it isn't just about understanding how the information needs to be used by us to operate payroll, but how that impacts the wider business. And now really is a time for an organisation to consider investing in their payroll talent. I know that that's not an easy message to take, but you know, picking up on Lou's point about investing in audit time and audit work, it's the same. Nobody was over-resourced when we went into this pandemic, and it's not got any better. So, sorry, I got on a bit of a soapbox. I'll move on.
Thanks, Sam.
No, but I think that's right, because this is the time for payroll to actually get the credit that it's due. I mean, this is something that we have done for the last 20, 30, 40 years. And it's now that businesses have to accept and realise that without payroll, a business can't function. And I do keep going back to that, but that is the reality. Nobody is going to work if a payroller isn't there preparing the payroll and pressing the button, as everybody likes to call it. It is an integral part of any business, and I completely agree with Sam.
Yeah.
Some employment lawyers are helpful too, Lou.
Oh yes, they are. Yes, you're right.
You're there at the very beginning.
You're absolutely right. And pension experts, they're definitely, you know,
They're
definitely too. Oh, very important.
Sorry.
Was the emphasis on some, Kirsty? Sorry.
Sorry?
But yes. Was the emphasis on some?
Some, yeah, maybe not me. A couple of points I would just make is that, you know, it's not clear whether annual leave will count towards the 33% of usual hours. I think it will, but again, that's something we're waiting for guidance on. And it doesn't suggest that part-timers will be prorated. And, you know, there is an issue. I'm definitely seeing an issue with more women leaving jobs or being made redundant as a result of this. And since they are still predominantly the ones who work part-time, this could be an added way where you lose females within your workforce. And we've come such a long way on diversity. I think this is yet another area. I mean, they're saying that there's been a McKinsey study that says a third of women are considering giving up or are being made redundant as a result of the pandemic. And I don't think we should lose sight of that, because I think the job support scheme probably isn't going to help that either.
Yeah, absolutely.
Yes.
And we're definitely going to talk more about that in the next slide, I think, where we're going to ask, we've got a few questions for you, Kirsty, just on that matter. Sorry, Simon?
Well, I think there's a challenge here as well, Natalie, and I think it's a consideration, because unlike the job retention scheme, the grant was actually available up front if you wanted it to be. It's been announced with the job support scheme, you have to have paid it first and you have to apply for it after the month is finished. Well, if you're weekly or fortnightly or lunar paid, that payment could be at the beginning of the month and you can't claim it until after the month's concluded. So there may be a 4 to 6 week time claim lag between having to fund the employee with the money and actually getting the grant from the government. Can business survive on that basis?
I think payroll may also be asked, as Kirsty was saying, to do all the calculations in October to see whether or not it's worthwhile doing a job support scheme. I'm trying to work out what a third or 2/3, you know, whatever the working time will be in November for people, and then working out what a third will be got back from the government. Projecting forward is going to be quite messy, but it is a good thing because if payroll has the resource, it does raise the profile, but it is actually quite complex, especially if we don't know rules. What about salary sacrifice? All those other things, we don't know what's going on.
Exactly, because you'll probably find that you can't salary sacrifice the grant claim again, I suspect. And the terminology is odd. Just with pensions where the net pay arrangement isn't and the relief at source isn't, it's actually the opposite. If you consider what the words really mean, they actually mean the opposite. Here we've got terms like usual, etc., and I think we'll find that it's not usual, it's unusual. So it's going to still be based probably on what happened up to March. So it's not even based on what your contract is. And I think it's going to be interesting to look forward to when we actually get the detail. The usual hours is not usual hours as we understand it. It could be something else. And that's the same with pay. So we could say, well, that's usual pay. Is it? I'd be sort of thinking coronavirus pay wasn't. It was based on a reference pay. So you have this concept of reference. What does that mean? And I think HMRC view that as being usual, whereas we don't necessarily understand it that way.
Yep. I've actually had a question come in. I'm just, rather than save it to the end, Fiona asks, how do we prepare for the JSS? Should we be checking employees' hours? How do you think we should show the JSS on a payslip? Like hours worked, top up, government top up, or do you merge top up and government top up? So a bit of confusion there as to how you would show that on a payslip.
Yes. Well, if I comment on the payslip, there's probably no obligation to show any splits at all. However, you've got to remember that you do have obligations under the working Employment Rights Act actually changes last year in the fact that you have to show variable hours. And I think a number of employers I've probably seen and interact have forgotten that. So actually they've been showing variable hours as furlough hours and they don't count because they weren't worked. So there is an element of thinking, is there historic legislation which came in April 2019, which we've lost sight of during furlough, of understanding what it is, because people are measuring absence and non-working in an amount of time, but that amount of time is not working time, so it doesn't count for those purposes. So that's probably a very confusing answer, and that's because the answer is very confusing, because the requirements are very confusing. But on a payslip, you can show whatever you like. The critical aspect is your grant claim.
Okay. Thanks, Simon.
Yeah. Following on from what Simon said, that requirement to report hours on your payslip where your pay is amended or adjusted as a result of the hours worked is important. And an important one to remember that I don't think has been highlighted anywhere yet. And it's a really timely reminder from Simon, because those 33% of hours, they will be worked hours and the pay will be varying according to those hours. So it's a minimum of 33%. So there might be more of that. So it's important that those are shown in the payslip, regardless as to how the employer chooses to show the grant element and the other element that will be subject to tax and NI in the same way, but comes under the heading support rather than actual earnings for hours worked.
And don't forget, it will include pension most likely, unless it says something different. So all those payments, I would expect pension to be contributed on. I did think whether or not the RTI field, which records hours, to be passed over to DUP for universal credit, would have to be amended. If you got it set as, I don't know, is that too detailed? What do you think, Simon?
Well, so far you would actually leave the reported hours field, which is A, B, C, D, or E. So it doesn't actually record actual hours worked. I think remains the same. But yeah, this is where it gets conflicting, Andy. And probably even the comments with Kirsty, because there's an element of a job support scheme. It may be that holiday is considered work time, but for national minimum wage, it isn't. And so you've now got things that are called work time for one thing, but not for another. And so it may be work time for job support, but it's not for the Employment Rights Act payslip hours recording, which relates to working. And so some of you will know, with the way my complex brain works, I haven't got a problem with that. Because I put on different hats for different things, but you have to have multi hats and think, for this sum, it is this value, for that sum, it is that, and for another, it is something else. A bit like pensions, Andy, because qualifying earnings is qualifying earnings, but pensionable earnings is something different. So whether you want to enroll someone, you do it on one value, and what you actually take their pension contributions could be a completely different value.
Yeah, which is why we need the examples. And then when we get examples of how it's going to work, we'll issue guidance as soon as possible. Because if it is going to be like the job retention scheme, where salary sacrifice, you have to gross it up, you've got to calculate what can you get back, all those sort of things, we need to issue examples, get it to yourselves as software providers, payroll service providers and employers to know what they're doing, and all within the next 3 weeks. Well, ideally beforehand to get software done.
Yeah. And we've got half term coming up as well.
Yeah.
Right.
It could be cheap.
But Halloween will be fun. Yes.
I think we've got enough scary stuff going on. I don't think we need Halloween.
We'll certainly have the trick and treat. Well, we'll have the trick, and we're not sure about the treat. Is that right?
No. So bringing it back then to our loose agenda here, furlough, the furlough bonus or job retention bonus. I think to start off, I'm pretty sure we have a poll on this one as well. We do. We need to launch that. So the poll is open. Will you use the job retention bonus? Yes, qualify and we need it. No, we don't need it. Or no, we won't qualify. So we're just going to keep that open for a little while longer. And Sam, I'm going to ask you to comment on this one. What do you think, whilst the poll's still open, the majority is going to be?
Heck, I think, I'm trying to think how it compares. Based on some of the earlier answers, I think we might see a surprise, no, we don't need it. But I suspect maybe the yes, we will qualify and need it. I'm going to go with that. But I'm terrible at these things. I'm terrible at predictions. Oh,
yes, well done, Sam.
Well, almost. I kind of pretty much put everybody. Yes, we will qualify and we will need it 49%. That's excellent stuff, actually. I mean, we ran a couple of polls back in August, a couple of quick polls to ask anybody who visited our news pages of our website whether or not they were thinking of accessing the bonuses. There was a very high percentage who were thinking yes, they would. But then we asked a follow-up question that said that of those who are intending to access the bonus, is it actually making any difference to your long-term employment plans? And actually only 24% were. It was the 76%, the highest percentage. Actually, it was making no difference to their long-term or employment plans. So it quite literally for them probably would be a bit of a bonus. Now, whether or not that's changed in the intervening months, it's difficult to tell. But as we think about the bonus, we were promised guidance by the end of September. The end of September came and went, and on the 2nd of October, guidance was published. That kind of added some meat to the bones of those high-level announcements that the employee would need to earn an average of £520 per month over November, December, January, to a total amount of £1,560. What we now know is, yes, that minimum income threshold of £1,560 needs to be met. But those November, December, January, what we're actually talking about is tax months. So we're talking about the 6th of November through to the 5th of February 2021. So it's the tax months that we're looking at. And those earnings, what are those earnings made up of, they will be taxable pay. That's taxable. So that's taxable. So what counts as taxable pay when you're submitting a full payment, an FPS through RTI, might not be earnings as we know it. And for anybody working in payroll, you'll know that taxable pay can be made up of lots of different elements. But basically, HMRC will be looking at the RTI returns to see that taxable pay to the tune of £1,560 has been met. And within each of those tax months, there will have been at least one payment. It doesn't need to have been £520. It could be lower, but there needs to have been a payment recorded and submitted through FPS. And really, employers need to be preparing now, because record keeping and compliance, full compliance, is going to be the key to success in order to be able to claim the bonus. So, you know, it's starting to prepare now. So if you've not had a chance to look at the guidance, and there isn't a lot of it, it has to be said, but if you haven't had a chance to look at the guidance yet for the bonus, then please take a look at it now. Because as I say, that record keeping, making sure you're on time with your pay-as-you-earn submissions. I know we don't need to tell anybody this, everybody knows this is the basics of payroll, being on time and being accurate with your record keeping, but ensuring that all of those details are flowing through to payroll in a timely manner. So, for example, one of the things that are required, making sure that you are allocating your leaving date for any employees who stop working for you before the end of the pay period in which they leave in. Now, we've already discussed today how often information is late flowing through to payroll. So payroll really now needs to be talking to colleagues, anybody and clients, and anybody who has anything to do with getting an information flow through to payroll. They need to be on point on this. They need to know that payroll needs to be kept up to date with what's happening on the ground, so that they have that information to update their RTI systems. Nobody wants to be non-compliant, but there's even worse to be non-compliant because your clients or your colleagues have failed to give you the information that you needed. So get that message out.
Thanks. Lou, is there anything else you'd like to add there in terms of like what has been published?
Yeah, I think another point to add to Sam is that the Treasury has told us that the claims for this will have to be between the 15th of February 2021 and the 31st of March 2021. So again, that's quite a small window, and it is quite tight. And then they always have that little add-on. The Treasury direction does not specify how the claim is to be made, but further guidance is expected in January 2021. So on top of everything that Sam said, then in the preparation, you have to remember that at the moment we're being told the window will be the 15th of February to the 31st of March.
So again,
Well,
that's a cash flow.
else to do around that time of year, have we?
It's a cash flow issue again, though, isn't it? Yeah. And during consultation periods, we are getting trade union representatives and employee reps saying, what are you doing about making sure you're claiming under these schemes? But for some people, they can't wait that long to get the money back. So that actually the timescales and working through the cash flows is really important. You probably covered it, Sam, but in case you didn't, it's employee can't be serving a contractual or statutory notice period on the 31st of January, and that includes notice of retirement. So that maybe something that slips under the radar worth pointing out.
Yeah,
there's lots of people want to retire at the moment.
Yes.
Okay, let's move on to the autumn budget. So there we go, picture of Rishi there. So what has happened? So I have a question for everybody really. What are the implications for payroll service and payroll software? Does that impact the devolved nations? due to the autumn budget being cancelled. Andy, can I ask you first to comment in terms of pensions angle?
Yeah, of course. The pension thresholds normally, well, Department for Work and Pensions control what the thresholds will be, which is the lower limit and the upper limit, and also the trigger, the point at which you could be automatically enrolled. And they tend to wait until the national insurance thresholds are known, and then the DUP will decide whether or not they continue to mirror the national insurance thresholds for the lower and upper AE thresholds, or whether they will make their own decision to do a different value. So they're going to wait. So we're waiting for HM Treasury to tell us what they are. And then DUP will decide if they agree, they want to continue mirroring, or whether they want to do something different. And then, of course, they've got to tell ourselves, particularly the software industry, to get the payroll system up to speed of what it is. And there's evolved government as well. Of course, Scottish particularly may decide to change the basic rate of tax. You don't know, to a different value to what the 20% is at the moment. If they do, then I guess the UK government, which decides the relief at source basic rate tax relief value for those pension schemes that are relief at source based, like Nest, whether or not that's going to change the overall rate for relief at source, which is set by UK government. Hopefully, Scotland will continue with having a 20% rate, and Wales will continue with their standard basic rate. We'll find out, won't we? But I don't know when these Scottish and Welsh budgets are going to be. Anyone know?
Not yet. You think they're normally due November, December, is it? And then Scotland's usually the one that holds us up, because they can never agree it, can they, until February? And then it's all a bit last minute. So yeah, it's a bit. I feel like a headless chicken, to be honest. I don't know what to do. We need the national insurance bandings, which fix statutory payments, which fix pensions. If the NI bandings are not announced, we're stuck. And this year, it took me, I wrote to Just Norman via Shailesh Farah, my MP, and I actually did get a letter back from him. And they fortunately announced it on the 31st of January. What a killer that was for the payroll industry, software developers, to deal with such late delivery of something that we normally get October, maybe November, occasionally December when the budget has been delayed, but January. Payroll start processing for the new year at the end of February. So it's very tight. I was hoping there might have been something associated with the winter economic statement, but there's been nothing, Andy.
No. Maybe there won't. But
you've got any good news for us, Sam?
Well, I don't know about good news. There's been a library briefing, a parliamentary library briefing, research briefing, that confirms that the April 2021 statutory rates will be announced in November. It doesn't say when in November, but that's, that provides some useful background reading if you have a problem getting to sleep at night, to help you understand the history and the calculation methodology between the increases. But the good news is that we should hear in November. So even though there is no autumn budget, there should still be the publication of some of the entourage that normally associates the autumn budget. So fingers crossed. Anyway, fingers crossed. Don't shoot me. It was a research briefing. That's all I'm saying. I can circulate the link to you, Natalie, so you can circulate it out afterwards.
Yeah, we could do that. Thank you.
We've had some speculation that minimum wage will be one of the lowest rises this year as well.
It'd be interesting to see whether or not it's frozen. Some of the rates are frozen, even maybe. I mean, it wouldn't be the first time. I think there is a history when NMW rates were frozen back in the olden days. So, but I know there was a commitment to increasing the youth rates this year by the Low Pay Commission when they were carrying out their annual review. So it'll be interesting to see whether or not there's a staggered approach to the rates. So.
Okay, sorry, I moved our slide along a little bit ahead whilst you were still discussing on the previous point. But we are talking about redundancies now. Let's start off with a quick poll. Temperature check with the audience. Is your business planning on redundancies? Yes, we're considering redundancy. No, we are managing without job losses. So let's keep that open for a little bit longer. Okay, who am I going to go to comment first on this? I think Andy. What do you think?
I think, yes, we are considering redundancies.
I think you're right. Yep, 70%.
That was much easier than other people because I only had 2 options.
Yes. So 70% yes, we are, and 30% no. Do you have anything further to comment on that, Andy? Or, I mean, we could just keep it as sort of a bit of a temperature check.
Oh, redundant. Yeah, where do you start? I mean, it's just a great. I don't know. From a personal perspective, an individual perspective, it's really hard, isn't it, for individuals to lose their jobs and maybe that's their main income in the household. So it can be quite devastating. I think from a practical, if you look at it from a pension perspective, redundancy, obviously payroll will be calculated redundancy pay. That's compensation for loss of office. We wouldn't consider that to be pensionable in normal circumstances. Pay in lieu of notice, that a normal pay, then we would see the standard would be consider pay in lieu of notice to be pensionable based on whatever pension scheme rules define pension pay as. So there is, and if someone was to trigger because you're paying redundancy, or paying no notice, holiday pay, and all sorts of things on top in their final payment, then obviously there's an exception that says you don't have to put someone into a pension scheme automatically rolled if they're under notice, which they would be. But also you could use postponement as well to not put them in to take one contribution and then they, and if they were put in, or even if someone was enrolled in just prior to being made redundant, once they leave employment, they can't opt out and get a refund. You can only opt out in the opt-out window, which starts the later of receiving the information to say you've been enrolled and the scheme being informed and achieving active membership. So once that, if you don't opt out before you leave employment, then you lose the right to opt out. That's a load of information there, isn't it? Anyway, that's my thoughts. I'll leave it with everyone else in terms of all the other areas about redundancy.
Yeah, so we've got the ACAS study indicates 1 in 3 employers are going to make redundancies in the next 3 months. So I suppose that stat we have there is higher than the average.
I also switched it round, our stats.
Yeah, it's quite a positive response actually. Fewer people considering redundancies than you might expect. I thought it would be more skewed. Some of the information we've seen so far that in the first 5 months, there were 500,000 redundancies, particularly June and July, there were over 300,000, and that was as a result of an FOI request. We found that out, and really, if you think about it, those months were probably the months where there were fewer redundancies expected. And now we're at the sharp end, so we can see that rise even more. There's been a 150% increase in redundancies in the first 5 months of the pandemic. And we've got 9.6 million on people who've benefited from the furlough scheme. You can only expect that that is going to get worse, especially with the local lockdowns and the end of the scheme. And as things bite into winter, if you can't go to pubs and hospitality over Christmas, those venues, for example, are very likely to have to make more redundancies than they already are doing. We're certainly seeing a lot more people contacting us to start consultation in relation to redundancy. If they're fewer than 20 people, there's still an obligation to consult, and we're now sort of coming towards the 9th of October, so moving from then, if you consult for a couple of weeks, you're coming towards the end of October already. So now is the time when we're starting to see progression in relation to redundancies. Collective consultation requirements had already kicked in. If you have more than 100 people being made redundant, then there's a 45-day consultation period, which is a 90-day consultation period in Northern Ireland, isn't it, Lou?
It is.
And then in the rest of the UK, it's a 45-day, and then if it's between 20 and 100, it's a 30-day collective consultation period, beyond which or during which there's an individual consultation period. So there's a lot to be done and is having to be done already. And the delay in the announcements around things like the job support scheme and the clarity on it means that decisions are already being taken, which are going to be hard to reverse. So I do think the redundancy figure is going to go up even more. And during this week, we've had tribunal statistics on the numbers of claims that have been, individual claims that have been submitted, which I think are up 18% already. The number of cases being dealt with is down 31%. And so you can expect that actually our claims system is also going to fall over in relation to the number of people pursuing redundancy complaints.
And your comment before, Kirsty, about discrimination and women and people with a responsibility for looking after people in their family or a caring role who are facing this discrimination. What did you want to expand on in that? Have you seen anything?
Well, in terms of selection processes, if you are deciding on who you retain, some of the criteria that might be used could be indirectly or even directly discriminatory, depending on what you use. So care needs to be taken about, well, there's, you know, we're just going to make that person redundant. They've been on furlough, we haven't missed them. And the reason they're on furlough is because maybe they've been sick, or they're shielding, or they're absences due to disabilities, absences linked to race, absences linked to age. And if they're selected due to those absences, it's possibly indirectly discriminatory or directly discriminatory. And so care needs to be taken about how you're going about a selection process and who you're including in that pool. The tendency is for many people to go for the people who've been off, who they think they haven't missed, whereas there are other people who may have been in who are doing the same job who ought to be in the pool for selection. And you know, separate to that, you've got people deciding that it's just too much and stopping, and not and opting for voluntary redundancy. So you're losing your cross section of diversity within your organisations. Makes sense.
Do you think we'll see that reflected in things like the gender pay gap reporting in future, and that things will drop down?
Yeah, I do think. I think the gap will widen, and I think, you know, you will get organisations who will subsequently be penalised because of it, because their gender reporting will go the wrong way. Their ability to even report on race and ethnicity will change, and we're already seeing companies refusing to deal with organisations who aren't taking the right steps in relation to that. So I think, you know, you've got to look into the future and consider the decisions that are being made now under a lot of pressure and how they may impact on your the diversity within your organisation. Because it's easy to pick the person that's not there, and it's easy to let people go because they say they can't cope, instead of trying to help them through and trying to make sure you retain the best talent and you understand circumstances are challenging at the moment, for in particular for certain parts of the community.
Yes. Yeah, I think that there's an element of, there's certain profiles possibly being hit more because of the restrictions we're living under. than would normally occur, and that may gear itself towards certain groupings, which is particularly discriminatory, to be honest.
Yeah, absolutely.
Also, I mean, on the policy side of this, in terms of gender pay gap reporting and reporting on diversity, there's a question almost that says, would it be right to continue to be reporting on gender pay gaps in this current climate? I mean, my recollection, and forgive me if I'm wrong on here, but my recollection of when the gender pay gap reporting obligations were brought in, there was an assurance that the policy would be reviewed to see how it was working after, I can't remember how many years, whether it was 3 or 5. And it just occurs to me that there's going to be a significant hit, definitely from this year, in terms of the earnings pattern of individuals, and how that will impact on gender pay gap, outcomes, not only for this year, but also, for next year as well, because this doesn't look to be going away anytime soon. So there's almost a question as to whether or not employers should be obliged to continue reporting at the moment, or whether or not that needs to be paused, for more than just the 1 year as it was earlier this year.
Yeah, well, it remains to be seen, but actually if you are having to report, you're going to need an explanation if your figures go the wrong way, and you're going to need to be able to say why you might have lost people in certain areas in a certain protected characteristics, like women or race or disability. Why has that happened, particularly in relation to gender, because we've got to report the gap, but there's also an expectation that you report on race and ethnicity by 2022, which is only a year away. So, how are we managing that?
Yeah,
So
that's it. It's minefield really, but gosh, that's a lot to think about, and I don't know how employers can actually, have strict sort of guidelines or protocols to make sure that they are not discriminating against.
There's a headline actually just come in. I don't know if you've seen it. They're extending the job support scheme to help all businesses legally required to close get 2/3 of salary, $2,100 a month. So an expansion of the job support scheme. Charlotte, who works with me, has just texted me because she knows we're on this.
It's great.
Thank you, Charlotte.
Sam's also on the news app, aren't you, Sam, to hear about
Well, no, I figured I'd better keep the news off, because we were hearing it, weren't we? I thought that might be slightly distracting if we kept getting weather reports.
the weather update. Okay, let's go on to plan for jobs. Let's see if I've got a poll for this. I do. Of course we do. So we're asking, will you be using the plan for jobs? Yes or no? And who am I going to ask to comment on this? Let's see, I can't remember who I was going to ask. I think I'm going to ask Kirsty what you think.
I think most people, well, I would say probably more people than not will be trying to utilise the plan for jobs schemes. I did have a poll where people were asked a similar question, whether they'd used any, whether they plan to use the schemes in the future, or whether they weren't going to use anything at all, and it was split a third. Mm-hmm. So I'm interested to see what the response here is. That was a particular retail sector. Oh no, that's interesting. Mm-hmm. Not using anything. That says it all, really, doesn't it?
28% yes, 73% no. So
yes.
I have a question here for Simon. So we're seeing a number of announcements on initiatives to help create new employment. Some we've covered in previous webinars, but what can you tell us about any new information?
So we're aware of the Kickstart scheme coming in relation to those that young people who have been on universal credit for some time. I think are these really geared towards more niche employers? So a lot of employers may struggle to think, how do I get this to work? So you have the young people's, but there are great opportunities. So there are an element of some of the industries that may be struggling for recovery. These are an ideal pool of people to be prepared for, because in effect, for 6 months, you're having the pay paid for by the government, but getting the benefit of the resource. However, there are elements of dealing with the social challenges of that group of people, training them up, having them experience, whereas a lot of them may not have experienced workplace at all. Also, the apprenticeship process of grants and incentive payments are there. Even potentially we can utilise that as a payroll profession, as we have the payroll apprenticeships going on. So to think, actually, is it a means of helping us promote education and training in our own profession with the apprenticeships? And we've seen other schemes going on. They don't necessarily directly involve employers, but are targeted at elements of people who've struggled to get into the workplace, such as the JETS project, where these monies and funds are there to actually help these people get into placements. But there is an element of, if we're going to enter a period of recovery, I guess it's very difficult, isn't it? Because this time a month ago, we may have thought there was going to be an element of an end, but a long trail, whereas today we find ourselves with the highest number of infection rates that we've ever had, although the death rates are still quite low. So there's an element, what is the future? So what can business plan for? So I think great initiatives, but there must be a lot of confusion. And then that goes on to things like the veterans, national insurance reliefs and plans, and who will benefit from these schemes. And so I probably concur with the response there. The general populace would probably think, what have these got to do with me? Whereas there's an element of thinking from a niche angle of, can we actually take advantage of this to help recovery and help people out? They're just some initial thoughts, I think, but maybe that's a little bit of a confusing sort of thing, but I think they're worth looking at and thinking, can we get them to actually fit in our business? And if you can't, dismiss it. But I think it's worth exploring because the support is there for it.
Yeah, I agree. Absolutely, Simon. I mean, this isn't the first time that something like the Kickstart scheme has been used by government. I mean, if I just think back over the year since my children were born and I first returned back into work, it was through a programme not dissimilar to the Quick Start scheme, but it was a 12-month programme. It wasn't a 6-month programme, and it did me no harm. So, you know, I think there's a lot to be said for these sort of schemes. But Simon's right, and that kind of feeling of nicheness probably arises as a result of the fact that that 30 placements need to be applied for, a minimum of 30 placements, which is quite a scale for a small employer to consider. So the most recent news, of course, is the news that the representative can be used to group together employers or organisations to bring together as much an application of 30 placements. But of course, the organisation who takes advantage of those 25 hours a week at the relative national minimum wage rate, they need to be demonstrating that they're creating a new placement that's not to the detriment of any previous employees. And I'm wondering, really, if for employers who are maybe facing the job support scheme now, who are thinking, actually, we can't sustain this level of support, we need to make redundancies now, are they going to be able to apply for quick kickstart in the future if they've made redundancies recently, and it's a sort of timing thing, so there's a lot of questions there. But that 25 hours, but once they've provided that evidence that they can, improve the employability of those placements, those individuals, and that placement exists, then once they've served their 6 months, that placement exists for somebody else to come along and fill that slot. So yes, I agree with what Simon says. There is a sense of nicheness about it because of the scale, but I think it could be, for the right organisations, worth persevering with. I think it could bring big benefits to an organisation, particularly a small organisation that needs that extra support.
But do you not think maybe part of it as well is that businesses are so overwhelmed by how much legislation that there is, by how much work that they have to do in the next couple of weeks, the next couple of months, that they see this as this is an opportunity, but this is more work for us to look at, understand, look at the business, look where we're going, and that some businesses are just concentrating on the here and now, where we'll have to make our next claim, and then we have to have the claim done by the 30th of November, and then we're looking at the new job support scheme, that it's just maybe overwhelming and how much there is, and that they really do have to have a business plan for the next 3, 6 and 9 months to be able to see, can I actually use this and take advantage of it?
Yeah, no, I absolutely agree with what you're saying there. But I think, and our polls have said this, not just this time, but in previous months, not everybody has actually used or accessed any of the schemes. So, there are still opportunities to access support from the government that maybe haven't been through the CJRS, that won't be through the bonus scheme, won't be through job support. It might be through other ways. And I think, in fairness to the government, there's a lot of variety in terms of the support that they're actually providing to employers and businesses. So if one doesn't fit, then there are others to try. And I think it's a minefield trying to keep track of all of the different ones. It'd be good if there was, in fact, I think there is one section on gov.uk that brings it all together. But, I think, that's one of the positives, I think, about what's happened this year in terms of how the government has or tried to support organisations with their employment. The sheer variety.
Yep.
But I sound as if I'm on a party political broadcast there, and I'm not. but there is variety there for for everybody, something for everyone.
I think we could run an apprenticeship for CJRS audits, etc., and have some young people come in to check all the calculations.
Placement for payroll.
Yeah.
Right, we actually asked to time, which is amazing. We are going through our discussion topics as planned. So now we can talk about into the future. So on your screen, you can see we're talking about the pension review, Brexit, off-payroll workers. We do a poll nearly every month about off-payroll workers. And I think I've got another one ready for us here, which Sam will be very excited about. Going to launch it now. Do you have off-payroll workers? No, it does not affect our business. Yes, and we're prepared for April 2021. Yes, but we need to prepare. Or what are off-payroll workers? So we wanted to make sure we had that last option in there for people to vote for. So just going to leave it open a little while longer for people to vote.
I guess April 2021 seems so far away, but it's less than 6 months.
Yeah.
Right. Share it on the screen so you should be able to see it now.
Hey, now this is scary. Come on. What our payroll workers figure is going up.
It is, isn't it?
Good job, aren't we?
In fairness, we do have some new audience people attending this session. Also, we have people that come back every month for question time. So, it's no reflection on your on what we've covered so far.
We're planning on focusing this a little bit more as we lead up to April, and in fact, probably in a month's time. Is that right, Natalie? Because if this is something that you pick up in March and think, oh, I've got to do something about this, you're about 8 months too late. So there's an element of you need to be doing something now or very soon, along with all the JSS calculations you're going to be having to do and all your grant applications and bonus, etc., to think about and kickstart. So off payroll working, if you want to say basically what it is if you employ contractors in your business and you're 250, 250 or more, or a sizable turnover, you're going to have to treat them through your payroll and tax and NI them. Do you know that? Because if you don't, it is coming. And we kind of got let off the hook this year because with COVID-19, our preparation was probably poor, but they delayed it a year, so it didn't matter. Whereas it's all gone through Parliament now, so April 2021 does matter, and you need to be ready. And there are quite stringent obligations. Did you come across this, Lou, in your public sector, or is that pre? Did this sort of thing come after your experience there?
No, I was part of it. So I was part of whenever I worked within local government, and that was already introduced whenever I was working in the finance team. And it is a huge amount of work whenever you look at what the finance team and the payroll team had to do to get that on board. So, I mean, whenever I came into the private sector in my naivety, working in local government, I thought everybody did it. So then whenever we started talking about IR35 in private business, then I couldn't believe how much work there was still to do and how little understanding really over the last few years that people haven't grasped exactly the implication that it can have for their finance team, for their business and for the payroll team as well. Because obviously, if you do go and look at IR35, it can have an impact on payroll, that they will have more employees going on to their payroll, meaning that they'll have more payments to process.
Yeah, I mean, following up on what Lou's just said, I mean, I'm actually looking at that 30% figure, saying, because I was thinking about this beforehand and looking at that poll question, no, it does not affect our business. And my question to you, 30%, would be, how do you know that? Payroll will definitely not know, because they won't be processing the payments for these individual services anyway at the moment, unless of course you're in the public sector. But in the private sector, you're not going to be doing that. HR are likely not to know about them, because again, these are companies' invoices that are being paid. Finance might not know, because they're processing an invoice, but they might not necessarily be clear on the detail that makes the invoice sum. Procurement within the public sector, they may know, but are they cascading that message out? So, you know, so my challenge for the 30% of respondents, and that's a healthy number, and I hope that proves to be the case. But my challenge would be, how do you know? You know, and in order for off payroll to working to be the reforms to be delivered successfully within your organisation, as Lou's already said, it requires a whole team approach to come together in order to ensure that flow of information through to payroll, to ensure that that deemed employment payment is subject to pay-as-you-earn income tax and Class 1 national insurance contributions. The good news, of course, for a small engager, and that's, you know, under 50 employees, turnover of less than 10.2 million, is that, or is that balance sheet? I've forgotten the figures now. Then the only obligation on them is if they are asked by the agency or the worker, if they are small, then from April 2021 they have 45 days to respond, to say, just to give assurance to the agency or the worker that actually the reason they haven't been given the status determination is because they're small, not because they're just failing to comply. And that came out of the review that was carried out at the beginning of the year.
And I think it's important then, I mean, really it's about education. It's about educating yourself and your business, not even so that it allows you to ask better questions whenever you do see something. I mean, if you have education, as in you've got somebody having a training session with you, or that you're even watching a webinar on, that information then allows you to be able to ask better questions so that you know in yourself what's correct and what isn't correct, and be able to maybe escalate it on to somebody else. Is this correct? Do we need to have better procedures in place?
No, indeed. Indeed.
So going back to a couple of those points we've got on here, Simon, I'd like to ask you, when when payroll legislation sort of goes back into its usual sort of pattern of what we should be expecting in terms of government plans. Of course, everyone's been focusing on COVID-19 and things, like you said, IR35 was pushed back. What can people expect for 2021? What do people need to plan?
Well, I guess there is an element of the lateness of the information as it comes out, so there'll be a reaction. But some of the things we are aware of are Scottish student loan implementation. If you're an SD Works user, you may or may not know that actually the change has gone in. So it's actually live now, but it won't kick in into live use until HMRC start to issue the SL1 notices in February, March, April time. So it's kind of a dormant capability, but it's there prepared. And if you're not an SD Works user, there's an element of, will your software actually be ready? And are you actually transitioning? We've got the Veterans National Insurance changes that's coming in. It may not affect you, but maybe, again, it's one of those niche sort of, I'll call it job creation type aspects of thinking, and it's different potentially. So we haven't really got the final detail, but it will start in April 2021, and it may change in April 2022. So April 2021, maybe you don't have any different category letter. You just have to make a grant application type style claim. But in 2022, when the HMRC have caught up in their development projects, we've now got new NIC category letters. And of course, Brexit and trade, we really don't know what's going on at all, do we? Or maybe we do, except at the moment, the status of Europeans to work in the UK will change. Some of that affects us potentially from the end of June, but officially from the 1st of January. So there's an element of right to work obligations and who you're actually allowed to employ. We've already had changes made for short-term business visitor legislation has just gone through. So the extension to May reporting, that's Appendix 8. If you're into that really techie stuff, which mad people like me are, and it goes on and on and on. And also, I guess there is the announcement, and Sam, you're on this group, aren't you? Which is pension review in small parts, and how that, and what is that going to lead for us? I'm not saying that's an April 2021 impact, but it's at some point, it's going to be a major challenge for us in payroll, along with devolved government. And if the Welsh change things next year, that's going to be a challenge for us as well. So there's lots, Natalie, but I think the important thing to consider is actually we're all very busy struggling with today. April is actually only it's under 6 months away. And so software, readiness, procedure, etc. are all part of the mix of the plate spinning we as payroll professionals need to do. Yep. And I'm very conscious as a software developer that I have to do it about 3 months before the payroll industry tends to, because you've got to prepare for it.
Of course.
And I've got nothing to prepare because I don't know what it is.
Well, what we're going to do is we are actually out of time now, but what we will do is I've got a survey built out, so everybody will receive it straight after the webinar. And in that, I'm asking, what would you like us to include in next webinar in November? So please do send over your suggestions. It really helps us make sure we put the right agenda together. But those points on the last slide are definitely ones we're going to start off with for November, I think. And maybe for the December question time, it'd be a look for what to prepare for next year, or what you should be preparing for next year. So yeah, it's the end of the question time. Any questions that were sent through, what I will do is I will send them directly to the panelists, and I'll collect them and I'll reply to everybody individually. So sorry we couldn't get around to the Q&A. But thank you very much everyone for attending, and thank you to our wonderful panel for all your time. And I think it was a really great session. And yeah, we'll be sending the recording after today. So thank you very much, everybody.
Thank you.
Bye, everyone.
Bye.
Everyone. Bye-bye.